We saw that, you know, what's happening with these declines take place of late. Has the mood changed, Enzio?
Absolutely. It's gone from bad to sour now, and I think that it's a confluence of a couple of things going on. Firstly, you've got the slowing economic time in Asia itself, on top of the slowing economic time in the globe, just worldwide, and of course then you have this whole Greek mess sort of laid on top of all of that. So it's just not a pretty story.
Yeah, so you said bottom line, right now is not the time to be in equity markets?
You just don't want to be in, other than if you're really trading in and out the whole time, because this is not a buy and hold time.
So what time is it? Where do you go into if there is a place to run to?
Stuff that's safe.
Yeah. And you also used the term economic time, and I'll ask you to explain that to us.
Yes, well that's an economic clock that we've developed, which tells us where we are in the cycle. And what we currently have in the economic time in Asia is that we're having an excess demand for money looming on the horizon. In other words, when there's too little money around, markets always perform poorly, asset markets always perform poorly, and I'm afraid that that's what we're seeing again because the central banks want to tighten to abate inflation.
Okay, so I guess go back to my question then.
Yes.
If that's the case, then where do you go to?
You want to go into the safe haven stuff. You want to be in gold, you want to be in treasuries, you want to be in the Swiss franc. I think that those are three areas, but it's really pretty boring, mundane stuff at present.
Well, what about the Australian dollar? You know, we were talking about investors maybe selling off U.S. Treasuries, dollar assets, getting into high-yielding currencies like the dollar.
Not a bad idea,
Yeah.
except my view would be that the commodities prices will continue flaking off for some time, again because of this change in global economic time with the sentiment that we were just discussing. So it seems to me as if that will also start abating a little bit.
Well, behind this, to some extent, is the tightening cycle that we're in, and that will, of course, be reflected in your economic time model. Now, with that, there's been a change in the mood music, hasn't there? Definitely. Are these high rates or other monetary policy means really hurting people?
I think they are beginning to hurt people, certainly in India, certainly in China, where you see loan growth decelerating quite rapidly. You also see the property market slumping, those recent downgrades in the property market. So I would say on the whole that you have seen that monetary tightening beginning to affect sentiment, removing that excess supply of money again.
Okay, but there is a supply of money in funds just sitting on the sidelines. We were talking to Javelin Wealth Management's Stephen Davies yesterday, and he says people have to put that cash to work at some point because you can't just be sitting on the sideline making no money holding investors' cash. When are they going to get back in then into the markets?
I think once you have a final solution to this whole Greek mess, I think then markets will begin to at least be a little bit more confident of themselves again.
That could be 2 years away from now, Enzio.
Well, not 2 years, I think about 6 months. I think it'll come to a short, nasty head, and then longer term we'll see that things get worse again. But I think that what the markets want for now is at least some kind of a basis upon which to make decisions.
But it's all these muddy waters, aren't there? Because you've got these political squabbles taking place between the ECB and Berlin, and then at the same time the IMF in the mix as far as giving money to Greece. Then on the other side of the Atlantic you've got that deficit debt ceiling, which of course politicians can't agree on. It's delaying tactics more than anything else being played out.
Well, all politics are local, as we know, and it just seems to me as if you're going to find the wheels coming off the troika. And what I mean by that is that the EU itself is going to have huge difficulties coming together on any form of a bailout for Greece. And the first who are going to not come, who will not step to the plate, will be the Greeks themselves. They will continue with their lies, and they just won't get anywhere.
Lies? What are they lying about?
They were lying about their statistics for quite some time, and that then hurt their image when it came time for the IMF to begin looking at the loan packages in greater detail.